Hey guys, Mike here. So, oh boy, what a day in the market, right? I mean, kind of just canceled out yesterday, didn't we? Going green, running up to the FOMC meeting. Is that what we're doing here? Well, I'm going to tell you right off the bat here, three things that surprised me, and I'm going to get into the charts and also the reason why I'm going to show you, as I showed the members, they fought so hard to make sure the market was green for January. There's a reason for this. Goes all the way back to the Christmas rally, the first 5 trading days of the year going green. All of it, okay? And I'm going to show you exactly why. And then something that the Fed will keep in mind tomorrow during the meeting, okay? And the three things that surprised me right out of the gates was, one was GM earnings. Was shocked, right? Not even shocked that they beat it. I was shocked on their guidance. And they said that when the CEO was asked about a recession, guess what? He said, yeah, demand's good for us. And they don't just sell EV cars. So it's not like a Tesla play. This ain't just EVs. They sell gas guzzlers and the EVs, right? And so that was, I think, surprised the market. Like, oh, great. Sounds good. Two was PayPal. Reports are going to lay off 7% of the workforce, about 2,000 employees. But instead of going green, the word got on the street about 2:30, it sold off, right? And what have I showed you? Every time a tech company says, we're laying off people, the market goes, yay, right? But this one sold off. So I was really surprised about that. So pay attention to that going forward, right? And the market likes that because they cut costs. But for some reason, didn't like it out of PayPal. Not sure why on that one. The third thing is this right here. And by looking at this, you would think tech is what led the way. But when you look at it, it's like, no, that's not. 1.39%. You scroll down, you got consumer discretionary. You go down, you got real estate, right? And then if we keep scrolling down, we got materials. And then below that is transportation, right? So that right there really surprised me on the day, because when you think about it and look at it overall, you would think it was going to be high risk, high beta stuff, but it wasn't. And there were certain things that came out, the economic data came out, shockingly, wasn't that good, but there was one thing the market really liked hearing, right? And you look at this right here, you got your January Chicago PMI, it was down 44.3 versus 45 being the estimate. And so you have new orders, employment, and inventories fell at a faster pace. Supplier deliveries rose faster, production fell at a slower pace. Not really good, but here's what got the markets going. This one right here, the employment cost index. Basically, to sum this up, it came in lower than expected, not by much at all. But you can see by the chart right there, it is dropping. So this is all about the inflation coming down faster. The market's like, yay, this is great. They want it to be as hawkish. That's what this is all about right here, okay? And what's crazy is I want to show you this. This came out today from a survey they did, about 4,000 people. Who knows, how accurate this is. But when you look at this, 2/3 of U.S. consumers claim to be living paycheck to paycheck. The white line is the ones living paycheck to paycheck. It's about 63%. The blue line down there is people that make 100K or more, which is quite a few people, right? And so it doesn't surprise me at all. And I believe the truth lies somewhere in the middle. I think the number is probably less than that. But because I showed you how much car payments, rents, and mortgages are right now versus what they used to be, and not just a little bit, they're a lot more expensive, right? And expensive. And so, and those are payments, once you sign your lease, right? It's 12 months, you're paying that rate versus what you're paying way down here a couple of years ago. Same thing with car payments. They're through the roof compared to what they used to be just a couple of years ago. And so it doesn't surprise me at all. And that's why they say, real income keeps actually shrinking. That's why, right? So inflation is coming down all right. But again, those prices now are set much, much, much higher than they were. So keep that in mind. Again, that's why people are shocked when they get interview CEOs and they ask them, hey, are you surprised the consumers held up as well as they have? Yeah, sure am. No doubt about it. You thought for sure we'd have fallen off a cliff by now, but not a bit. Now, let me show you why the market worked so hard to get January green. And this is why right here. Because you can see this goes back to 1928. If there is the probability of a positive year unconditionally is 66.3. If you can get a green January, you up that all the way to almost 80%. That is huge. Right? If you go right down below that and you get the probability of a negative year, obviously it's 33%. And then if you get a negative January, the probability of a positive year goes all the way down to 46%. And that's why I told you the market works so hard to make sure we got that trifecta. And I'm actually going to dig deep and do a members video tomorrow, no matter what I find, to figure out, what does that really mean? Like, just because we get a green January and the market's going to be positive, you can have, because we went up huge, right? I mean, it was like, what's the S&P up 7%, 8% this month, right? But then if you tell me the whole year, the S&P is up 10%, well, I'm going to try to do the math here real quick. 10 minus 7 is 3. So that means the S&P would go up 3% over the next 11 months, right? So I'm going to look in and dig in more to the trifecta thing, to January, and just to see what I find and stuff, and kind of show them that. But because I'm interested a lot more now to see this. And looking at the charts, I mean, look, what happened? Look at this mess right here. All that happened, there's yesterday. But you can mark that out because it's like it never happened. They just cancel each other out. Look at that. I told you, you don't need to go Six Flags, Disney, get on a roller coaster, you know, because what you see happening right here? You got your roller coaster right here. Up and down, enjoy the ride, you know, get your cotton candy and popcorn. Wait a minute. Whoa, here we go. My goodness. And then at the very end of the day, boom, the last 10 minutes of the day popped above 405. And real quick, looking at the daily here, you can see we're in this ascending triangle right here. We tested on top multiple times. We're setting up to test it again. Funny thing is, the top of that ascending triangle is where the next call wall is, which is 410 for tomorrow, which is why we busted through 405, because at last 10 minutes, nobody's holding those options anyway. They expire today. And so we're either setting up for FOMC. If it ends up being positive, we go through it. If not, we end up maybe retesting the upward trend line on that triangle. And what the Qs do, just keep it simple. Busted out of that chop box again, went right back down in it this morning, came right back out, busted out of the chop box. We actually did not feel that gap, which the S&P did. You might have noticed that there. And you can see the gap better right there to the left. Again, just canceled out the 2 days. Still got the gap above right there. We can see that definitely getting filled tomorrow if they decide to try to run this up into the meeting. And then you got the IWM real quick. Again, I was sitting in that chop box. We had busted out before, ended up selling back into it, and then now all of a sudden, a huge, powerful move around 130 today, end up busting right back out of it. We'll see if there's another false breakout. Again, all of this depends on FOMC. And if you're new here, please hit that subscribe button. Really appreciate it. And if you're getting anything out of this, please hit that like and think about sharing the video, guys. And that's just the way it is. I mean, everybody wants a prediction of what's going to happen. Again, it's what the market wants to hear tomorrow, right? I mean, we know 25 basis points is baked in, right? That's what I think it's 100% what everybody's thinking, and the Fed doesn't like to surprise people. Again, they've already leaked this to the guy from the Wall Street Journal who writes for them, and he's put it out there. But they keep saying, well, you know, they're super hawkish. The market's going to sell off. How much more hawkish can they be? You know, I mean, every meeting they're hawkish. Keep saying they're going to go over 5%. Keep saying they're going to remain over 5% for longer without cutting rates. All this stuff, right? And yet the market's doing what it wants to do. And so that's what it's about. So you want a prediction for tomorrow? It's whatever the market hears. That's where the market's going. It's that simple. Whatever they want to hear. Because me and you can listen to the same thing, and you may hear one thing, and I may hear a totally different one. But it's what the market wants. And the other thing we got to figure out is how much of this is the January effect, and then how much of it is actually a true move, right? Because the January effects where sometimes you get these crazy Januaries. I've showed you the chart before, right? And then all of a sudden things sell back off, okay? Because we've had some huge moves. And so if anything, for a healthy market, I hope if we're going to keep moving, that's fine, but let's consolidate some, all right? I mean, these parabolic moves, something it's like a rubber band. Faster it goes up, faster it comes down, okay? And so that's not what I want to see. But here's another thing that can keep it going. This just came out today. Investor cash levels at all-time highs right now. Now, this is January 25th, 2023, and you can see if we go back and look from 2012 to 2018-ish, that's a normal level. If you go back to 2008, look what happened. Investors didn't have anywhere near as much to invest when we started turning the market right there. But you can see now, even going through 2022, it went up. It didn't go down. So people still have more cash to invest, right? And why? Because now with all the higher interest rates, they can earn money on their money. They have compounding interest going on, something they hadn't had in years, which is why you see that 2012, 2018, what could you get for a CD in that time range? Put in the comments if you remember. You know, what can you get for a savings account? Some measly 0.15% or something, you know? And so now all of a sudden people are getting 8% on a bond here, or 4 or 5%, or whatever it is. You know, money market's 3%, 3.25%. I mean, you can actually compound your money. And so, you know, that's something to think about. And, you know, going into tomorrow, we do have something else coming out before the FOMC. And, you know, I don't know how the market's going to react to this, which is the JOLTS job report and the ISM manufacturing PMI. Is that going to move the market? It could a little bit, but basically it's all about this. 2 o'clock, right? That's when the interest rate decision will come in. And then Jay Powell come out at 2:30. Now, something to keep in consideration, this is going to go in their decision. And this is crazy to me. This is the interest payments now on the debt. Now they have raised the Fed funds rate so high. Look at that. That is going straight up. That was like a meme stock chart right now, okay? That is just the interest payments alone. You can see right here, U.S. paid $853 billion in interest payments for $31 trillion in debt in 2022, more than the defense budget in 2023 is projected to be. If the Fed keeps raising these levels or keeps raising them, then they'll have to pay at least 1.2 to 1.5 trillion in interest on this debt. And keep in mind, we only collect 4.9 trillion in taxes. And so I don't care if we print our own money, and all these people believe that debts and deficits don't matter. Yes, you have to pay your debts. Remember in 2011, what happened? We got our credit rating downgraded, never got it back from AAA to AA because of what they did with the whole debt limit stuff, which is what another thing we're going through right now, which some people are a little worried about. That would stink. But our government's done it to us before, and that would be disastrous since obviously we need people to buy our debt. And so that is something to keep in consideration. By the way, I'm not worried about my generation so much, but I look at that. Guys, what about the children? You know what I'm saying? Wasn't there a song about that? Like, what about our kids? I mean, come on. That's unsustainable. You know it, and I know it. That is crazy, man. And as far as earnings, I mean, real quick, I say this to last for you. I mean, the only thing I see coming out, ain't nothing in the morning going to change the market. And the only thing in the afternoon people are excited to see or want to see is Meta. Can it keep going higher, right? Because it's up almost 100% from its lows. And so people are wondering, can this keep going? And so that's what it's about. So I'll be here tomorrow. I'll be waiting for, Jerome Powell to get there and be super hawkish, But trust me, if that dude even hints the word pivot or something, or we're going to pause in the next 2 or 3 months, shoo, you can just see the market going crazy, right? So let me know in the comments what you think, is going to happen tomorrow. I wouldn't be surprised for us to run up like we normally do into the meeting, hear what he has to say, and then, of course, be super hawkish, sell back off some. But I don't know, because they totally lost control of this market right now. I mean, it's gone. The commodities are going through the roof. Everything's going up. And so, I mean, it's going to be interesting to see what he can possibly say tomorrow to try to get his, reign or control back over the market. I don't know. So just let me know. Anyway, if you got anything out of it, hit the like and subscribe button. I really appreciate it, guys. And I'll see you tomorrow for another exciting one.